As you can see, as the topic says, talking about inflation, there's currently huge inflation or big inflation currently ravaging Nigeria, as well as the FX issues we've been having, as well as the central bank's policies. All these things have been making Nigerians' heads to blow. So let me use the word blow. And it's not been easy. Things, something I plan to buy in the next 3 to 4 months. I closed my eyes and I bought it yesterday because I know the price was already being revised upwards. And now my eye don't read. I don't know where to go from here now. Till next salary time now, I don't even know how to do it, but it is well, sure. So all these inflation issues has been ravaging us so much. And I would like to call one of our speakers, Hani or Rikelewa. I don't know which name you prefer me. I call you,
And
but I
it's
think
just fine.
Hani is okay.
Yeah.
Okay, all right, Annie. So I'm very sure you've been a professional in this area of economic macro issues, and this over the past couple of years, the inflation is a normal thing, but it has happened so huge and big over the last couple of years. What factors do you think have been driving this huge increase? And it's so much. What factors do you think has been causing it?
Um, so I think there are a few kind of fundamental factors, right? So everything in terms of prices is structured by dynamics of demand and supply. So if we look at the supply side, what we've seen is that uh, in the aftermath of COVID, a lot of global supply chains were disrupted. That's been intensified by some of the issues that we've had in relation to climate change, which has impacted in particular on shipping and logistics. So, the Panama Canal. Now, more recently, we've had ships having to be rerouted from the Red Sea. And so, as a consequence of that, if you're a nation which imports, which much of Africa is, what ends up happening is the cost of the goods that you're importing goes up. The global economy has been pretty slow in its recovery after COVID on that regard. Um, Also, in relation to supply, domestically, we have a lot of issues. Firstly, the impact of climate change, massive flooding in 2022 significantly impacted our harvest and also destroyed a lot of the internal roads and stuff that we use for getting food from the farm to market. In Nigeria, we don't necessarily fully have a problem with production. We actually have a problem with transport, logistics, storage. So we lose about between a quarter and half of what we produce to bad roads, to poor storage facilities, to mismatches in terms of producers and off takers, right? Um, and then the third dynamic of supply also is like the production element itself and insecurity, um, the drying up of the Lake Chad. All of these things have had significant or substantial impacts on the climate in Nigeria, which makes it more challenging if you're not a country that invests very heavily in research in relation to agricultural output. Um, and so, as a consequence of that, our farmers aren't really yielding comparable produce uh, uh, from the same amount of land as other countries in even Africa, talk less of in the globe. But then there's also a demand issue. We have a growing population, obviously, but we've had years of massive development finance interventions from the CBN, which has pumped a lot of money. We are in the middle of a liquidity crisis, and so there are too many naira, too many pieces of naira chasing too few goods because we have supply problems, and so you kind of get a double whammy on the inflation front. And if you look at the global dynamic, last year, a lot of countries, one of the reasons the Fed in America hiked up interest rates was because of inflation. In the UK, inflation hit double digits back in Q1 of 2023. And so if you imagine that whatever's happening, if you're an importing nation, there's a kind of lag and then it impacts you. So we were dealing with the domestic inflation already, and now we're facing the wave. And the final kind of horcrux in all of those issues is the FX crisis because it's costing us more to import uh, goods. I hope that makes sense.
That was quite fun and insightful because I understand the fact you're talking about agriculture and how we've not been able to move this the production and how it wastes or reduces before it gets to the end users. But my view, maybe I would like to throw this to Samuel, is the area of value added, Samuel. Don't you think Nigeria is also lagging behind in terms of manufacturing, Samuel?
Yeah, thank you very much. To be honest, I think a lot of the conversation, a lot of the factors have been mentioned by Annie, and as you've said, to be fair, value added in Nigeria is really close to zero, and that's in fact when you look at the GDP numbers, look at the growth of the manufacturing sector, it gives you a grim picture of how value added services are in Nigeria. But I would like to take it a bit further into, because inflation is like that element in Nigeria where even someone in primary school knows, even if they don't know the meaning, they just hear the word inflation and it just sticks somehow because the prices of things just keep changing on a daily basis. You remember in 2019 when the past administration closed land borders, prices of food went up significantly, this was following the fact that we were not producing as much as a result of insecurity across different areas, especially in the food producing regions of the country. Then, while recovering from that, we fell into COVID 19. A whole lot of things happened there, climate change and flooding and whatnot. Then again, the Russia Ukraine war started. Prices of imported food like wheat and whatnot went up. And then last year, we also saw a significant rally in the price of things following crude oil, energy prices and what. So Nigeria has really been suffering from a whole lot of things, from the demand side and from the supply side. Because then again, when you look at it from the monetary side of things, money supply is at a record high. Currency in circulation is at significant high, despite the fact that the CBN has hiked interest rate multiple times. So there's just a lot of things. And as you have said, imported will continue to suffer from imported inflation in as much as we do not produce, we don't have added value. If you look at our numbers when it comes to our export values, you realize that over 90% is in form of petroleum products. The rest are natural, raw agricultural items. We do not have as much value that we give out there. As much as we don't have to give out there, we also don't have to consume here in Nigeria because we always keep importing. Hence, the inflationary pressure in other economies out there will always impact us. And that's why you see our imported inflation numbers at astronomical levels and in recent times, Victor.
Okay, so it's just majorly talking about it's not just local in terms of the factors that have caused it, and more or less international combined with local. But the effect has been so huge. I would have liked to ask Emeka that question. Thank you very much, Samuel, for that response. And Emeka, though she is not up on the speakers section, let me just see if I can throw this question to Victor. Bento Vibes, yes. Let me throw this question to him. You have been in Nigeria. I'm very sure you've been to a lot of a lot of states in Nigeria, and you know how an average Nigerian has responded to this inflation. To you, talking specifically to you, how has this affected you, Victor?
Okay, thank you, Victor, for that. Just rightly as Annie pointed out, so Nigeria is very import dependent. We have a lot of naira chasing the dollar and less of the dollar chasing the naira. That's a big problem that we have. As I said before, Nigeria is import dependent. We import so much and export so little. We have businesses bringing in goods at ridiculous prices. So, as an import-dependent nation, basically, it's so bad that we even import the basic things of life, such as food and what have you. So, let me try and break this down into different categories and how it affects each sector, each class of individuals. So, first, when you look at transportation cost over the last few months, and we saw fuel prices move from a 160, 170 to over 600 naira. That's like quadruple the price. So if you were filling your car before, maybe like a Corolla with 10,000 naira, now it's probably like 30K, right? So if your salary has been, let's say, 200K, and now you are now spending 30K to fill your tank, which you were filling for 10K before, you have a lot less to save and even a lot less to spend on yourself for other things, right? So even budget wise, your budget has had to go up. So if in a week you were spending 10,000, a month you were spending 40,000, 40,000. Now it's 4 times that. So that directly affects each and every one of us. So from people that have their own cars to public transportation, the prices of all of that has gone up. When you look at food as well, we import a lot of what we eat, from raw materials to finished to processed foods and all of that. So this increase in prices, especially for food, what it translates to is that people now use pretty much all their earnings and all they have to basically meet their basic needs, so transportation and food. And this, trust me, this goes a long way. So you have a lot less to save, a lot less to invest. You've not even finished surviving, you're thinking about saving and investing, you get. So even for businesses also, this has a lot of implications, right? So when you look at operational costs, so I think over the last 1 or 2 years, we've seen a lot of businesses crumble and fold up. So when you have very high operational costs, so for example, if a company is running on diesel every day, I think diesel is around 1,000 naira now or so. A few years ago, this was way less than that. So if you're looking at those costs now and how it affects businesses, you see that businesses will fold up because they can no longer survive. They probably would have to lay off a number of people. So these things really, you can see how it has affected the everyday man, the common man. So from food to transportation to businesses, even to housing, landlords are increasing rent day by day because they also have to meet their own needs. So if you look at all of these things, you can see how the increase in prices have affected each and every one of us. So at whatever level you are, even if you are a so-called big man or a small person, this actually would affect you. So I think it's something that everybody is affected by. It's not just the local person or the layman, or every single person in Nigeria is highly, highly affected by this. So your basic needs, we've even seen people resorting to even taking petty loans just to meet up with their daily needs. So it's actually a major issue that is affecting each and every one of us.
I can see that it's true. I understand what you're trying to do. It has touched every single person, and even especially more touching the low income individuals as maybe think of. Emeka, is there anything you want to add? I can see your backup now. I would have thrown the question to you here because I know I can see a lot of frustration is coming out from you now. But please, I beg, keep the violence on the low. Emeka.
Well, when we look at the history of the price increase in Nigeria, let's just look for the major cause of this inflation that we're experiencing, which is the disparity between the naira and the dollar. As of 2015, the dollar was trading for 180 to 200, while the naira was against the naira. But as I speak to you today, it's 1,400 to 1,500. This has also caused, this has also resulted in an increase in the goods and services. Take, for example, as of 2015, rice was 7,500. But as I speak to you today, a bag of rice is 65,000 naira. Now, why is a bag of rice 65,000 naira? Because when you go down the chain of production, what you see is that the
Hello, Emeka. I think he has gone off. Hello. Okay, I think it's off. I can hear
hello,
him. Okay, I think you're back.
can you hear me?
Okay, yeah, I can hear you now. Yeah, you can just okay, you can just keep it
Okay.
short. Yeah.
Okay, so what I was saying is that when we go through the history of the price increase in Nigeria, what you see is that the dollar has gone up from 180 in 2015 to 180 to 200 that was trading in 2015 to 1,400 to 1,500. And we can also see corresponding increase in price of food and transport. Just take, for example, a bag of rice. Are you with me, Victor?
Yeah, I can hear you. Go on.
Okay, so a bag of rice that was selling for 7,500 in 2015, as of 2024, a bag of rice is 65,000 naira. Now, when we go through the chain of the value chain, what you will see is that from even the production, the fertilizers that they use to produce some of these crops, what they do is that they import some of those fertilizers and they have blenders here in Nigeria. So to import these fertilizers, they have to buy some of those necessary components to produce these fertilizers. They need to buy them in dollars. So what then happens is that when they purchase it in dollars, they also need to clear it. When they clear it, they need to transport it. When they transport it, they need to blend it. When they blend it, they need to sell it on to the farmers, and the farmers need And so when you see all this, the cost is moving from one person to the next person to the next person, and then they now drop the cost on the final consumer.
Okay, so majorly you're saying that the price flow from the producer to the consumer has been a major thing that has been affecting the inflation. Well, I think the network over your hand is just too much. So, based on what Emeka has said now, let me now take you back to when the CBN governor stated, was it when he was speaking to the House of Representatives, even before that, when he mentioned that the inflation rate may drop to about 21%. Yeah, I think that was before then, by the end of this year, maybe November, December. So, throwing this question out to Samuel, you as a researcher and where you used to work on those numbers and everything, I want to ask two questions based on that. First, do you think this 21%, the inflation rate reaching 21% is realistic? And number two, the way this inflation has been going, does Nigeria really have proper data to show the way the wage has been growing? Or let me first throw it to Dami first, then before Samuel comes in, right? Dami, okay, the first question to Dami, right? First is, do you think these policies and the CBN has carried out, do you think they are kind of realistic for us to achieve this 21%, or you think it's just speaking out of the blue? And maybe someone will not pick up from your side, then I will also ask someone the other question, because it's I think Nigerians are becoming a bit too tired of promises from the federal side and not seeing the responses back on our side. So Dan, what do you think? What do you think about that issue?
Yeah, the expectation or the claim by CBN governor that inflation should come down, the inflation would relax and hit, say, 21% by year end. Yeah, it's possible. Um, it's possible, in my own opinion, only because of base year effect. I think Samuel can speak more to base year effect, right? Um, I mean, people that monitor inflation figures and the estimations and all that will give you more insight on that. But in the real sense of prices on the street, for a layman, I think we can only expect things to get worse. Prices will still keep increasing. Well, base year effect, but I mean, might not increase as much as we saw last year, but we'll still continue to feel pinch of increasing prices of food, transportation, everything basically. So, saying things like that, in on any forum is just to, play around with numbers and try to give people some confidence. When in the true sense of it, prices will continue to increase because the fundamentals are still really, really bad. Okay. We are still pretty much import dependent. We import everything from finished goods to even raw materials, or I mean semi-finished goods, right? Um, Insecurity is a major problem. Okay. Our agriculture is at an all-time low because farmers are not going to the farms anymore because of fear of bandits, kidnapping and killings and all of that. So those are the basics. In my own opinion, insecurity is the major problem we have in Nigeria. Um, Foreign companies that could have flowed in FDIs to set up maybe processing plants to help us manage our midstream crisis. Now, when I say midstream crisis, is all the challenges we face between the upstream, which is more like production, and then delivering finished goods, things like storage that Annie talked about, storage, transportation, all of those things, insecurity affects them. So companies that could have come to set up, processing plants to do all of that, are afraid that their expatriates, when they come to Nigeria, could get kidnapped, and they have to pay heavy ransom or even lose their lives in the process. So, I mean, in my own opinion, insecurity is a major problem. Why FDIs are not coming, why companies are not being set up, why existing firms are even leaving. Okay, it's the same reason why even our local farmers can't do production. Talking about agriculture. Okay, so I don't see, I mean, with all of those challenges, I don't see prices relaxing. Yeah, the figure is just figure. I mean, recently they told us that unemployment is just only 4%. They did some, I mean, tweaking to numbers. They say it's now 4%. So those kind of things, it's just numbers. Okay, but in the true sense of it, what the common man faces on the street is pressure and pressure, and that's just going to keep increasing as long as the exchange rate is still unabating, and all of these challenges are still there.
So one
Samuel,
thing I can think of, yeah,
yeah,
Samuel, you want to
let
speak
Samuel
now?
speak to the Bezier effect and that
That is
that
a
that
effect. Yes,
question. Yeah.
I think it needs to make it very easy for the layman to understand.
Okay, yeah, thank you very much. So, first, Dami had said that, of course, base effect was going to come to play, and what base effect is just talking about is so calculating inflation is a function of this year, this month, for example, comparing with last year that same month. So, when you have a very huge high from the previous year, the chances are you will not see that much level of increase anymore in the current year that you're comparing with. So that's basically what you're talking about when you say base effect. When you have a very huge high from your previous year, even if there's an increase, the current year would not grow as much as you would imagine. It won't grow as fast as it was the previous year. And I agree with Dami, and somehow I agree also with the CBN governor. 21% inflation for 2024 is actually obtainable. And I really want us to put it into perspective, right? So our year-on-year inflation for December 2023 is 28.92%. But our inflation for 2023 is 24.77%. So if Cardoso is saying that Nigeria's inflation in 2024 is going to come down to 21%, he is not going too far, because 21% is the average for the year. And when you compare that to 24.77%, that's basically a difference of 377 basis point, 3.77 percent point. So it's not really so much, because I personally expect inflation to remain high in the first half of the year, but second half of the year, base effect will now start to come into effect strongly, and then you see those numbers trickling down. By the time you average it out, we might find ourselves around 21, 22%. So of course, it is possible. But if you're asking about if the numbers are true reflection of what is happening in the market, so if you're looking at it from an average Nigerian, you probably would say, nope, definitely not, because when you buy something today, and in next 2 3 weeks it has increased by over 100%, in some cases 50%, some cases 20%, and then the MBS is saying inflation is around 28.9%. It makes you feel the numbers are just cooked. But then again, you need to know that that basket of inflation has a lot of things. So you have some things that are highly volatile, that goes up and come down, and by the time you do that composite index, they average themselves out, and you don't see so much growth. Of course, even as analysts, we also know that it has been long since the MBS has revised that basket, in terms of the basket itself, and in terms of the weightings allocated to the various items, which we think should have been done. I think it's over 15 years now, and it should actually be revised every 10 years. So in that case, you might argue that there needs to be some modification because of change in demographics. But is the number a true reflection? 28.92% is worse as it is. And but can we come to 21% from 24.77%? There's a high chance we can, if the government slow down on its inflationary policies and try to find a way to ensure price stability, especially in terms of FX, Victor.
So FX majorly, this issue causing wild inflation has been so huge right now. There was also one other question I wanted to ask you, Samuel, as regards to wage growth. If we had enough data in Nigeria to, at least if we have the wage growth growing at a particular percentage, and we know, okay, inflation is growing at a particular percentage, my purchasing power can still be remain intact. Do we have anything like that? It's just a question I just thought of recently.
Victor, that question is that
Hello?
there's no data anywhere. Because even the minimum wage in Nigeria, some states and countries
Yeah.
have not been able to implement it. So that data is not anywhere. And I can say, based on face interviews and whatnot, salaries of people, of Nigerians, they are not growing at the same rate as inflation. In some organizations, you see them increase at maximum of 10 to 15% annual increment in salaries. That's for those who increase. In some other cases, they actually do downsize their employees. In fact, it is now a term even in business called right sizing. So when you see your operating cost is growing beyond, or severely is impacting on your bottom line, you now start seeing people start looking for teams or units in the firm that they can reduce in such that business will still be able to move on, and at the end of the day, operating costs will come down. So, my guy, I don't think there's any data to support wage growth in Nigeria.
Exactly. So I thought as much also. Although I would have loved to listen more to you, but I've forgotten you are not on Channels TV, so you don't school me too much. But okay, so others, if you want to speak, those in the listeners page, you want to speak, you can just raise your hands and we'll bring you up to speak probably later on if you have questions or comments. And we don't want to spend too much time because you're going to spend like an hour because it's a Friday. If you see the way I'm dressed right now, you know that I have somewhere else I'm going to after here. So don't let's delay each other at all. So there was a time Victor mentioned the FX issues we have. That's the CBN trying to find a way to fight it, and there've been a lot of circulars. I think one even came out again today about caps. Another one came out some days ago about NOP limits. Another one about IMTO outbound transactions. Samuel, sorry for throwing this question back to back to you. Can you just give us, as in layman's terms, what these circulars, what do they all mean, the NOP limits, what do they mean?
Okay, thank you very much, Victor, for that question. The CBN has, I would say, in the last 2 weeks, has been a lot of has been one of the busiest week for the CBN since they came into at least this new administration, right? So the number of circulars to FX market operators, to IMTOs, to banks. Now, to explain the first circular, which was released immediately, the FMDQ revised its pricing methodology for the closing rate for NAFEM and NAFEX, was the reduction, or the more like placed a limit on the NOP positions of banks. And just to explain that, what NOP means is the net difference between the overall foreign assets and foreign liabilities of banks. This is both on and off balance sheet statement items. I mean, so basically what it means is that foreign assets for banks, foreign liabilities of banks, by the time you do your addition and subtraction, what you have left is called net open position. And then when you have a positive, that's when your asset is more than your liability. It's called a long position, and when it's the other way around, it's called a short. Now, in layman terms, what it means is that when you look at financials, I'm sure you see a lot of news from various media houses talking about profitabilities of banks. You see 100% growth, 80-90% growth in their profit, and we all know that. In fact, it's even evidence from their financials that it's largely driven by FX revaluation gains, since our exchange rate was devalued from around 460 to now about 900 as at that point. So of course, their FX position led them to have significant growth. So what the CBN is saying is, reduce your FX exposures, because again, there've also been some evidence of speculative activities from the banks. So if you can make that much profit, 100% profit, 100% growth in your profit as a result of revaluation gains, you are incentivized to buy more dollars and bet that okay, the FX is going to go as high as 1516, and of course you are shrinking the supply of FX in the market, because when individuals come to the banks to ask for dollars, bank says they don't have, whereas they have dollars in their coffers. By the time Naira devalues against the US, they make a lot of profit. So what the CBN is trying to do is curtail this speculative, or what some have even termed some form of round tripping in the FX market. They also ask them IMTO, so the likes of some of those fintechs that facilitates international payments. Now they can no more help you with outbound transactions, rather inbound, and even the inbound you have to be paid in naira. So a number of things have happened in that system, and the idea is that they want to be able to improve liquidity. And when you look at the market too, in the last 6 to 7 trading days, we've seen a huge amount of inflows in the NAFEM. There was a day, according to the CBN, over 800 million was even traded on a single day. That's record high. We've not seen that in a long time. So what is expected is that when you have more supply in the market and pushing the demand, there will be some level of stability in the FX rate, and we hope that that is going to work because a number of analysts are actually optimistic based on these policies. Victor.
So
So
in one line,
sorry,
you can say
let me
that,
add to that, right?
okay.
I think the basic or simple um to put it in simple words, right? All the circulars and everything is just CBN trying to oil the market that has sort of been dry for quite some time. Okay, dollars that banks have sat on, I mean, in dorm accounts and all that, on their NOPs, yeah. Especially for those that are, net long on those dollars. The circulars is, pushing them to sell to market. So increasing supply, IMTOs that don't want to sell their dollars to the market because there is a cap on the exchange rate. CBN is saying, see, whatever rate you want to sell your dollars to the market, sell it. No more caps, no more ceilings, no more price limits. So those things will bring supply to the system, and then hopefully those things start to, reduce the pressures. Yeah, thanks.
Okay, so
Okay, thank you very much.
can I just add to that, Victor, as well? So I think, as you rightly
Okay.
said, there was another release today by the CBN, right? So they basically freed the naira. So it's willing buyer, willing seller. So everybody go and hustle for your USD at whatever price you are comfortable buying at. Then I also read a report recently that 4 of the 5 major banks are holding about $5 billion in their position. And of course, the CBN gave a directive. I think they were supposed to adhere to that directive as at 2nd of February. And I think it's only Stanbic that has actually adhered to that. So what the CBN is also trying to do is to try and bring this USD out of the banks that are holding it into the system. So that way there's a lot more supply. And if we have that actually come into play, then we can see a bit of direction in terms of price discovery of what the naira should actually be.
Sorry, I just wanted to jump in. Apologies,
And I
but I
was
think
actually about to throw the question to you too and
okay.
answer this based on that. Are you also optimistic about those policies?
I actually am. So the problem that we have in our FX market, and I'll try to kind of like be as basic in how I explain it, but it's a long-term issue, right? We've had points in our history where we've had an FX liquidity crisis when we had really strong reserves. We've had points in our history where we've had challenges in the FX market, obviously, when we've had really weak reserves. The fundamental problem is that because the Naira has been held for so long, either through pegging or the WDA S system, we don't have effective price discovery. So the real actual value of the Naira is not known to people. Now, in normal circumstances, that's fine as long as your CBN can ensure that everybody gets as many dollars as they want at the price that the CBN is setting it. But if you don't have enough dollars to give to people, then people are going to have to look outside. And so the parallel market is a really significant factor in this. So what the CBN is trying to do is address this problem in a few ways. So the first is like, I think a lot of the net open position, the net open position circular, the IMTO stuff is essentially to make the parallel market redundant or obsolete. So people don't have to go there because the IMTOs were historically one of the core kind of pillars of supply for the parallel market. The second thing is also ensuring that we have transparent, open, and automated transactions, right? So if we can't track how much people are willing to pay for the naira and how much people are willing to sell, pay for the dollar and how much people are willing to sell their dollar, then we don't have a means of price discovery, and essentially it opens it up to cartels, right? And then the final thing that I think is actually really important here is it seems that Cardozo is taking from the playbook of Sanusi back in 2010, 2011, in that freeing up liquidity and FX flows in the market also means that you're far more likely to attract FPI. And I know there's been a lot of talk over the last year or so about FDI falling and all of that stuff. But if you look at our recovery in the 2011 to 2014 period, much of the foreign inflows or the capital importation that we saw, so that's dollars coming into the economy, was actually coming hugely disproportionately. Over 80% of it was driven by foreign portfolio investment, and in particular at the time it was equities. At the moment, if you look at the capital importation of Q3 last year, the only place where we saw a significant quarter-on-quarter growth was in money market instruments under FPI. So that's things like your treasury bills, your like your sorry, my banking papers and all of that kind of stuff, right? And so, like, what seems to be the case is he wants there to be a lot more flow going through the market. Absolutely, that's the first stage. He wants to force the banks to take their excess dollars into the market in order to ease up supply. And he's anticipating that in response to that, what we'll see is an inflow of foreign capital in our capital markets. And if you look at the interview that he did with Arise News earlier in the week, he talks specifically about how foreign portfolio investors are really the people who keep coming back and really keep trying to grapple with and understand the reforms that are taking place. And he also hinted that we're already seeing some of that, some of those inflows coming in. Crucially, it's not about how many dollars you have, it's about how they're moving around. That's why hoarding is a problem, right? It's never really about how much you actually have. It's about how much you're willing to let go of so that the people who need it in that moment are able to access it. So I do think that if this policy is going to continue to be successful, that will be staked on ensuring that, if you can't promise everybody that they'll get their dollars, how much you say they're going to get their dollars, taking your hands off it and not creating the necessity for a black market or a parallel market, but also it will be dependent on how much of the story that we're telling about the economic reforms that the CBN is undertaking gets bought by foreign portfolio investors. I'll leave it there.
So based on that, we can't really say what the value of the naira to the dollar is right now until the price discovery is ascertained, and with all these policies, is going to lead us there. Okay, let's be optimistic, just like the way you are. So, as a portfolio manager now, Victor, let me throw this question out to you now. And you've seen all these directives by the CBN, and they've not had any meeting for the past few months since the July. What do you think the CBN will do in the next meeting scheduled to hold this month? Are they going to lose? Are they going to tighten? Or are they going to hold the way it is?
Okay, thank you, Victor. Okay, so since Cardoso came into the helm of affairs at the CBN, we've actually not had any MPC meeting, and that's a bit of a worry. Well, there are reasons why that has happened or that has not happened, right? I think maybe he's probably trying to settle and all of that. Interestingly, we didn't have this January. I was expecting that we'll have this January. Most times we have in January, right? I think the next MPC meeting will be very, very interesting. I think a lot of people want to pay attention to the body language of the CBN. I think a few weeks ago, I was on the side, or I think I was of the opinion that we could probably keep rates same levels or maybe see a 25 bips hike. But I think after the interview that Cardoso had with Arise TV, I think the body language of the CBN is actually an aggressive tightening. I think I read a report recently. Can you hear me, Victor?
Yes, I can
Okay,
hear you. You can
okay,
go
great.
on.
Okay, so yeah, as I was saying, so the interview he had with Arise, so he just gave me the impression that the CBN would actually go a bit aggressive. I think Bloomberg, I think, said about 500 basis points. I think that is quite aggressive. And I think I saw somewhere else, I think 200 to 300 basis points. For me, I think we'll see 100 to 200 thereabouts. I think over the last few weeks, we've seen that the CBN actually going to go heavy in terms of borrowing. We've seen how the fixed income market has reacted already. So bond space, We've seen yields touch 18% again. Then also most recently, okay, we've also seen a lot of OMO bills issuances this year. I think three or four already. I think about 1 trillion. And if you look at what happened in the treasury bill space this week, we saw the 1 year bill close at 19% discount rate. I think that's an effective yield of about 24. So it just gives you the idea that, okay, these guys are actually going to borrow a lot. That's one. And they're also going to try to tighten, they're trying to mop up as much liquidity in the system. So for me, I think we should see a bit of an aggressive tightening, maybe 100 to 150 basis points. And I think they want to see how that plays out before they might do more tightening. But I think 500 might be too aggressive. So for me, I think I'm around the 100, 200 basis points hike.
Does anybody else have a different view? Because some think, oh, they've already used all the tools they've used, so let's see, maybe they're going to keep some more. I have a feeling you have a different idea. Or Danny, you're also into the investment
No,
space.
no, no.
What are your views?
It's clear. It's clear pretty much. The posturing
Alright.
and the stance of the CBN governor in all of his interviews and the session he had with the legislature. Um, yeah, the hiking is coming, the tightening is coming. But like Victor said, I don't see them going to I don't see them doing anything that outrageous. A 200 bips hike is just fine. That will push us to 20.75. I think that's just enough for now. Then they just watch market reaction. I mean, and then in March or I don't know, April, they will then recalibrate. That's what I think. So I'm pretty much with Victor on his own. It's 200 bips hike or even just 100.
So how has the market been reacting right now? You said the market reaction in October period. Is the market, how is it reacting to it now? Are the yields, how are they going? How are they, don't let me
Uh,
use the word yield because of people that don't really understand much. Can you break it down in layman's terms?
yeah, of course, Victor already swept through. I mean, he
Mm-hmm.
already swept through all that. It's
Mm-hmm.
been pretty much very bearish. I mean, with all the
Mm-hmm.
circulars coming out, very bearish reactions. Bearish means that markets just sell off and sell off on fixed income assets, and then the yields or the interest rates on those assets just continued to go up and up. As we speak now, treasury bills at the last auction this week, Wednesday, we saw it. We saw yields on the 1 year bill reach over 23%. So that's to tell you how much market has. I mean, that's an all-time high on treasury bills. Okay, so yeah, they like these interest rates to be up to try and attract foreign investors and get some foreign capital into the system. But again, like
Mm-hmm.
Annie touted or pointed to, whether those foreign capital will come and stay for long, it's another thing we'll just watch and see. But if they are pitching on the very shortest end, it just means that those monies are hot monies. But I think right now, the CBI governor doesn't really care much if hot monies or monies that will stay the time, that will stay for a long time. But I think he just wants to deal with the current pressures first, and then see how it goes next.
Okay,
Yeah.
Um,
so I think Annie wanted to mention something, but can you give me some seconds? I acknowledge those who are raising up their hands to come to the speaker session. Once our speakers are done, we'll bring you up. I think we just have a couple of, about 5 more minutes. So, Annie, do you have a different view? Just take like 2 minutes.
yeah, I mean, I think there's not really any option but to tighten, right? Because you have so much in terms of money supply, and then you also are looking to attract FPI, right? So interest rates have to go up. I think what's exciting about this MPC is that we don't know who's going to be there yet. Right. And Cardozo was really strident in saying that they're picking people who are independent minded. So it's a bit of a random mix. But in that context, I think that the wager, and this is in terms of how it impacts on ordinary people, because we don't really have a credit society, so base rates in terms of interest rates don't have a significant impact on people directly in terms of mortgage prices, etc. But I think the wager that Cardozo is making is if they hike up interest rates and foreign capital flows in, then the likelihood is that the FX sort of crisis will dampen a little bit, and that might impact in terms of reducing inflation from another angle, if that makes sense. So I definitely think interest rates will go up. The question is like how long they'll stay there.
Okay, okay. I kind of share the same view. So finally, now moving on to the area of investments, like we've all seen a lot of macroeconomic issues faced by individuals, and they want to say where they can get returns. At least if they can catch up with inflation, to at least be better than just saving. I'm throwing this question out to everyone. I'm talking about the speakers. What investment opportunities are there? Well, let me start with Emeka. I think it's been a while I've heard his voice. I kind of miss his voice. Emeka, what investment opportunities do you think Nigeria can access in these periods of inflation?
So for me, I always believe that a half bread is better than none, despite the fact that inflation is this high. I believe that whatever you can do to shorten your deficit or to balance yourself out, I feel like you should do it. However, if you are looking at investment options, I think you can look at the equities market at present. And then if we are also looking at hedging, I believe that we should also look at doing investments in dollar denominated instruments. I feel like with the way that the dollar is going now, I foresee it continuing its rise, despite the CBN posturing, despite the optimism from the CBN governor, because the underlying fundamentals haven't been tackled. Whatever the government wants to say, the market has spoken. The demand outweighs the supply, and we can see it in the price. The price has gone up, and the price is going to go up. That is my honest opinion. So I do believe that if anyone wants to do an investment now, I believe we should be doing the investment in dollar-denominated instruments. But on the short term, if you're unable to access FX, I believe that you could also go into the equities market or real estate.
Okay. Who else wants to say something? Victor, I think you should say something. What investment
Yeah.
opportunity do you think?
Okay. Thank you, Victor. Okay, so let me make it very specific or straight to the point, right? For me, I'll be looking at real estate, USD options, as Emeka rightly said, and equities as well. Of course, we know that real estate is somewhat inflation indexed. So that's a no-brainer. So for USD options, just to keep the value of your funds or whatever you have, I think the USD options are not bad. I think the last 2 3 years we've seen a lot of people move into that space. So I think there are a couple of USD options available to Nigerians as well that you can even enter at low prices. So I know that some fund managers have dollar funds and dollar investment opportunity. I think Norren will have a dollar fund that you can look at as well. And when you look at equities too, I think equities is interesting for me, and that's because equities sometimes reflect what the economy is doing. And if you look at it as well, it's somewhat inflation index. So let me give an example. So if you look at FMCG guys, right, at whatever level or whatever pricing it is, they will still sell goods, right? So they will also increase their prices, and that goes to the common man as well. Right, so you see probably revenues increasing, although operational costs will go up, but you see that as prices of things are going up, they will still be making money. Yes, they might have issues and all that, one or two issues and all that, but still is a good place to go. If you also look at the performance of the equities markets, I think last year we did about 46% year to date, and I think at the moment, even this year alone, we've done about 36% thereabout. So I think equities for me is good. If you pick the right stocks, you can actually do a little above inflation levels. And I think anything above inflation levels in Nigeria, in terms of return, is actually really good. So yeah, you can just speak to your stockbroker. If you need a good stockbroker, of course, you can reach out to Norren as well. We can advise you on that.
I think maybe I should just bring my money personally to you. I think I'm interested in that equities part. I want to grow my money to grow higher than inflation, if it's possible. So yeah, I think we've heard from two investors, and so
Yeah.
you have something to say, Samuel?
Yeah, I wanted
Is
to say
that your
something,
audience?
but I think Annie also had a perspective. So probably let's hear from her. I think
Okay, so
my own
let's take
dimension
let's
is
take
kind of
each of you because
different.
time is fast spent. Let's take each of you 1 minute each.
Okay, so let me go first.
Annie, okay.
Okay, sorry.
Okay, you can go for it.
I think Victor and Mimika has really hit the nail on the head. But someone has said that now is not the time to save. Now is the time to spend. And as much as I agree somehow with that, I think this is an opportunity for people to actually invest in themselves. Inflation has always been high, and it looks like it's going to remain high for the foreseeable future. And what you can do is to also ensure that if you can increase your revenue as much as possible, do so. And that might be a function of diversifying. Investment in equities and other fixed income assets, USD instruments can be an opportunity, but also investing in yourself, taking a course, maybe on Coursera, on Udemy, doing that MBA that you want to do whatever that you can use to improve yourself, make yourself more marketable in the labor market, diversify your income flows. I think that can be an opportunity to also edge or at least level with the current trends in inflationary pressure.
Um,
Uh, Let, 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 let me let me pivot from where Samuel stopped.
But
Yeah,
I
talking
think
about
Danny. Okay, I was thinking Annie. I think Annie had something to say. Maybe after she's done, you can talk. Danny. Apologies. So that we do as if we are cutting her short.
oh, okay, she was already okay.
Yes,
Okay,
she was already
continue,
speaking.
Annie.
Yes, Annie.
that's no worries. I was just going to say, I think it. I feel a responsibility to kind of report that. Obviously, the liberalization of the FX market also means that um, dollars the value of the dollar is likely to kind of fluctuate quite sharply, or could potentially fluctuate quite sharply, right? So, if you're using naira to buy dollars, it is possible that you could kind of uh, get caught with your shirt up, right? So I think that's one thing to kind of bear in mind if you don't already have dollars or you're not earning in dollars and are looking to invest. In relation to equities, I think that one of the things that I've experienced in terms of investment in NGX over the last year is very important to do due diligence in terms of companies, their corporate governance, reading their actual annual reports, and looking for growth opportunities. I think there's a tendency to kind of do short-termist investments. Obviously, you can make a lot of money pumping money into individual banking stocks, for example, in a short space of time, but then they also depress quite quickly as well. So I think it's important to kind of look at some of the sectors like healthcare, like agriculture, FMCGs, where there's a limited FX exposure, where it's actually possible for significant long-term growth that isn't solely dependent on the hype around that particular equity at that time. So that was my advice.
Okay, Dami, is that, can you go on now, Dami? Or she's spoken your mind already? Okay, all right. Um, so we have two people coming out from the listeners session. Resta, I would love to take, maybe you have a question or you want to make a comment. Let's just keep it short because we have just few minutes to close. Rasta, can you hear me?
Yes, I can. Good evening, everyone.
Hi, how are you? Welcome.
Yes, thank you very much. Shout out to Victor Nyema. It's the guy that invited me.
Okay.
So I won't take much of your time. So you've made very good points, and you guys are speaking from the portfolio management or the investment management perspective. So I'm going to come in quickly from the operator perspective because we play in the export space, trading commodities. And I think it's one of the investment opportunities that I didn't hear anyone mention. We talked about equities and real estate and some other things, but I think it's an aspect and a sector that has a lot of potential, right? Because we talk about agriculture, and agriculture is a level of this. But what do you do with the excess that comes from agriculture? Most times is through exploitation. That's how you, if you're not going to add value, because we don't want to start the conversation of adding value, because we know we're not doing it now, and it doesn't look like something that we're going to start doing tomorrow or in the next few, in the short term or even in the medium term. So I think it's an area that holds a lot of potential from the old things that we used to know about, like cocoa and sesame seed, things like that. So basically, I think it's an aspect. It's a sector that also needs that kind of, I would say, boost, because what you find out in the Nigerian export or commodity space is that because of the inefficiencies in the market, and I think someone mentioned it, large part of the goods that are produced, they get wasted. They get wasted because some of them are in places where no one can access them, or we don't have proper storage, and even oftentimes we don't even have even the way we use fertilizers and things like this is just wrong. So you find out that people have big contracts from buyers in different parts of the world. They give them deals of $400,000, $1 million, and they don't even do 1% of the transaction. They can't, because even they cannot raise money from anyone. I mean, we currently have a lot of contracts that are huge, and then you go to the people, that institutions that are supposed to fund you, and they say they don't know you. Who do you know? Things like this, and you have a proper business case. You have a proper business case. Sometimes we've even had transactions that were, I would say, de-risked, in the sense that we had transactions that we even had things like letters of credit from people that are reputable companies, but you find out that it's also very difficult to even raise 1 naira with even an irrevocable letter of credit. You now begin to wonder why the CBN is investing so much time on this financial gymnastics, going up and down with a flurry of seculars back to back. I don't even know who is released. It's just like songs, just releasing back to back seculars. And it's just one lever, it's just one tool. There's only so much you can do from this side. I mean, you need production, you need to produce. If you're not gonna produce high tech, right? At least like Russia, they've made a lot of money even with the sanctions by just selling a lot of base commodities, crude, natural gas, things like this. They just sell commodities and in large quantities. And we didn't even know that Ukraine was that vital until the war came, until this Russia-Ukraine war. And then it's affecting everyone, even all the way in Africa. The prices of wheat and some other grains are being affected because these guys were shipping these things in large quantities. So I don't want to go on and on into a rant, but this is just my little contribution. I'll leave it there.
Thank you, Rasta. You see me giving you thumbs up when you were mentioning the issue of Ukraine. We didn't know how important they were until the Ukraine and Russia war began. So when you're so important and something happens, when you sneeze, everybody catches cold. So I don't know if Dami is back and wants to say what he wanted to say the other time before Annie came up. I guess maybe he's having network issues. So time is fast spent, and we don't have anyone else who has a contribution to make. So I think we've generally spoken about how inflation, the FX issues has been affecting each and every one of us over time, and the central bank's policy to abate that. So I just want to thank every one of us for coming on. This is just the first edition of this Talk Morning with Norren. Hopefully, subsequent editions, I would love to see you there. Annie, Victor, Dami, Samuel, Emeka, and Rasta also into the commodities guy. Let me give you that nickname, the commodities guy. And thank you everyone for joining. Don't know if anyone asked question. I brought up the few people. We don't want to take too much time. So don't forget, use the hashtag Talk Money with Norren in order to push this conversation up. Thank you very much, the speakers. Thank you for being part of this talk. And don't forget to follow Norren Berger across the social media platforms at Norren Berger, at Norren Berger on Instagram or Facebook or anywhere you can think of. So thank you very much. I'm already prepared for my Owambe. It's the weekend. Let me go and dance, at least forget my sorrows. And don't forget, let's support Nigeria. It's on Sunday, so that when we are done, we'll know which country we are supposed to tackle with when we win. Don't forget. Thank you very much, all. Enjoy the rest of your weekend. See you next time.
Bye-bye. Thank you.
All right, cheers, guys. Thanks.
All right, guys. Bye.
Thanks, guys.
Bye.